Analyzing property and casualty insurance data is a valuable skill for students and early career professionals looking to break into the industry. Whether you're interested in underwriting, actuarial science, risk management, or financial analysis, understanding how to work with publicly available datasets can give you a strong foundation. Today, we'll break down where to find this data, what metrics to analyze, and how to use this information to develop insights about the property and casualty insurance industry. Publicly available datasets provide a wealth of information on insurer performance, market trends, and emerging risks. Let's start with one of the most accessible sources, SEC filings. If a company is publicly traded, it must file quarterly and annual reports with the Securities and Exchange Commission. The 10K filings provide detailed breakdowns of revenue underwriting income-loss ratios and investment income. By comparing year-over-year performance, you can analyze how different insurers manage profitability and risk exposure. Another great resource is investor presentations from publicly traded insurance companies. These documents, usually found on company websites, summarize key business trends, market conditions, and strategic priorities. If you want to understand how an insurer is positioning itself in a competitive landscape, investor presentations often highlight growth initiatives, new products, and challenges like rising claims costs or regulatory changes. Next, let's talk about industry reports from organizations like AM Best, NAIC, and S&P Global. These sources provide deep insights into industry-wide performance underwriting trends and capital adequacy. AM Best's reports, for example, focus on insurer financial strength ratings and market share analysis. The National Association of Insurance Commissioners, or NAIC, offers aggregate financial data premium volume and loss ratio trends across different lines of business. S&P Global publishes research on insurance market trends, helping analysts understand the broader economic and regulatory impacts on the industry. For those interested in claims and loss trends, ISO reports from Verisk provide valuable data on frequency and severity patterns across different lines of insurance. These reports analyze claims trends in personal auto, homeowners, and commercial insurance, helping insurers adjust pricing and underwriting strategies. Government agencies also provide useful data sets. The Bureau of Labor Statistics, or BLS, publishes reports on insurance employment trends, wage data, and economic indicators that impact the industry. The Federal Emergency Management Agency, or FEMA, and NOAA provide catastrophe data, which is crucial for analyzing weather-related claims and property insurance risk assessment. If you're interested in risk modeling, reinsurance, or climate risk, check out datasets from the National Hurricane Center, the United States Geological Survey for earthquake data, or wildfire risk models from state agencies. These datasets are widely used by insurers to refine underwriting and catastrophe modeling. Now that we've covered where to find the data, let's discuss how to use it. Suppose you're analyzing personal auto insurance trends. You could pull SEC filings for major auto insurers like Progressive, Allstate, or Geico to compare loss ratios and pricing strategies. Review NAIC premium data to identify market share trends. Analyze ISO claims reports to see if accident severity is increasing. And check economic indicators like inflation trends, which can impact repair costs and claims payouts. For commercial insurance, you might compare AM Best reports to see which carriers are growing their commercial property portfolios. You could use FEMA flood maps to assess catastrophe exposure, and you can analyze workers' compensation trends through NCCI reports. The key to making sense of this data is looking at multiple sources together. If you're analyzing profitability, don't just look at underwriting income. Compare it to premium growth, loss trends, and investment performance. And, if you're interested in market share, check how different carriers perform across different lines of business. Understanding how to analyze insurance data can give you a competitive edge when applying for internships and jobs. Many entry-level roles in underwriting, actuarial science, claims analytics, and risk management require data interpretation skills. Even if you're not working directly with data, being able to read financial statements, interpret market trends, and understand loss ratios will set you apart. As the industry becomes more data-driven, learning tools like Excel, SQL, or Python can help you analyze large datasets more efficiently. Many insurers also use platforms like Power BI or Tableau for visualization, so having experience with these tools can strengthen your resume. If you found this helpful, don't forget to like, subscribe, and follow for more insights into the insurance industry. Let us know in the comments if you'd like a deep dive on specific datasets or analytical techniques. Thanks for watching.